Good morning, this is Tom Aspray with the Viper Alert Market Wrap video for the weekend in July 22nd. First, a quick review of the market action. The bears took over on Friday. Not totally surprising since the S&P was bumping into the widely watched 4,000 level. You can see the NASDAQ composite, which has been leading the way at the upside, got hit the worst, down 1.9. S&P down 0.93. Dow actually wasn't too bad. More of a value play probably, only down 0.5%. The volatility index was also down, so those looking to hedge for a decline using the VIX calls did not do well. Market breadth was negative, not too bad on the NYSE, 1310 up, 1911 down. NASDAQ was worse, 1324, 3278. New high, new low analysis was still negative. We've seen a couple of days where the new highs have been greater than new lows, but still no trend emerging there. Let's look at the futures actions first, based on the 260. Of course, past performance is no guarantee for future results, but it was a good week. We got into the weekend long, and we're reversed here on Monday. Last Monday, stopped out here. We hit the first target 38.90, but failed to get the second target at 39.35. So still took a combination of about 120 points out of those two. Turned negative on the 18th. Moved sideways and then reversed back to positive on Tuesday, and pretty much long ever since then. Took about a 39-point hit on the that reversal here, and pretty much we're long the rest of the week, hitting the targets at 39.31. 39.60. We got up to as high as 40.16, but the target at 40.18 was not hit. This sort of summarizes the trades. We'll be including those in the updates on a during the week basis. I think that might be helpful for you. So given the reversal to the downside on Friday with an entry point of 39.54 and a quarter, we closed at 39.63 and a quarter. The downside targets are at 39.11, 38.81, and 38.20. The stop we are using is at 4,261. Looking at the daily analysis, it turned back to positive last week also for an entry level at 39.47. So we're up a little bit there on that position. Targets at 40.44, 51, 41.32.76, and at 43.09 and a quarter. The stop we're using is at 38.72.08. In the special session next Saturday, for subscribers only, I'll be looking at some of the indicators and how they can help you time some of your other market positions, but shouldn't interfere with the straight signals from the 260 or daily analysis of the futures. So let's look at some other charts. The Spider Trust was finally able to make it above its 50-day moving average. That hasn't happened since April. That's the pink line here. The 20-day EMA has risen to 387.51. So that 387.51 up to the 50-day at 390.20 are a good area of support. We could test that early next week. The AD lines, S&P 500 AD line moved above these prior peaks. That's a good sign. But any pullback needs to be brief and needs to hold above this moving average. And if it turns up from there, then the moving average will clearly be rising, which is a positive sign. Stocks only, still the weakest. It broke sharply to the downside. It hasn't overcome its most recent peak, so it's still negative. Though it may not look like it, the NYSE All AD line has showing some more positive technical signs. Let's take a closer look at that one. You can see last week, or a week ago, the NYSE made a new intraday low here, but the AD line made a much higher low, forming this bullish divergence, and then we overcame this downtrend here and that peak, confirming the divergence. So we've overcome the downtrend here, barely, and so of course now what we need to see is a clear uptrend. So once, like the other AD lines, any pullback needs to be followed by a move above last week's highs. Key level here is to change the major trend is this downtrend here. Some other positives last week. Investors again a little more bullish the AI, but it's really just showing a positive trend, which is typically, what it does in a rally. You can see way back in 2020, and in the fall we had that sharp sideways action in here, but the bulls were convinced. But I'm watching the NAAIM, so that's the National Association of Active Investment Managers, and they've been pretty much out of the market here, very low levels. You can see during the COVID crash, they got below 10%. So this week on Thursday, I'm looking for it to get above 50 level. That would be a good sign, indicating that institutions are starting to buy some stocks. That's a positive for the overall market. And oftentimes, this measure leads the market. You can see it topped out well ahead of prices last fall. Weekly AD line, it is still negative, and on the S&P, though, it's real close to, within a few ticks of turning positive. Of course, the NASDAQ 100 has been leading the market higher. You can see this chart of the QQQ. We hit that first resistance level at 357, and looks like, or 306.57, I should say, and we're seeing sort of a pullback. We could get back into this 93 area, back to these two highs. AD action is impressive. We broke this downtrend, so the advanced decline line on the NASDAQ 100 is leading prices higher. So you want to see a pullback here, and then a push higher will be consistent with even a further rally. That is consistent with the analysis of the growth versus value stocks. This is a ratio of a growth index and a value index. So when it's rising sharply, that means growth is outperforming value. When it's falling, as it was from roughly November until May or so, this means that value is stronger than growth. Of course, for most of the bull market, it's been a growth-led, and the longer-term analysis, in my view, still favors value, but this rally looks like it could go further over the near term. Well, that's all I have for today. As always, if you have any questions, you can email me at tom@viperreport, and we'll be updating the futures positions and sending out the weekly doji report over the weekend. Thank you for tuning in. Good morning, this is Tom Aspray with the Viper Report. The video you've just watched was recorded on Saturday morning and sent out to subscribers for the Viper Daily Alert Service. It's a regular weekly feature. And those of you who like to hear my video updates, you might consider a subscription. However, I was not able to include this chart, weekly chart of the QQQ, due to platform issues at that time. So it is pretty important in my view. We can see that the Qs had this pretty steady decline, rallied back up into March, peaked out in early April. Another wave of selling, lower lows here in the QQQs. The NASDAQ 100 AD line made higher lows. We only have data for this advanced decline line going back to 2009, but that's the first bullish divergence like that we have encountered. So that's a pretty positive sign. Where a strong move above this peak would further substantiate that divergence. Also interesting that the relative performance, the weekly, has turned positive, so that suggests that it has started to outperform the S&P. It's essentially been underperforming the S&P since just before Christmas of last year. The volume is one of the missing ingredients in many of the ETF rallies, so that's something we'll need to clear up in the next couple weeks. If you're interested in trying out the Viper Hot Stocks Daily Alert, if you're an option trader, we've had some really good success in the past couple of months, and some of our index option traders are using the futures timing to buy and sell calls or puts. You can come to theviperalert.com and click on this link. It'll this link will take you to a description of the service as well as what's concluded, including the weekly doji reports that are now just sent out to the daily alert subscribers every weekend. So if, for 3 months it's $150, it's a 30%. If you're a subscriber to either the ETF or the hot stocks, you sign up for this link for $65 and we'll give you a $15 discount on that 1 month trial just to get your feet wet. We are still honoring the year-long rate that was offered for Wealth 365, and this link is also in the email. Normally it's about $800 a month, and if the results continue to be as good as they have been the last couple of months, that price may go up. But limit time offer, $469 a month. That's over a 40% discount. And of course, if you aren't satisfied within the first 30 days, we'll refund everything except for a $40 processing fee. So great. Hope you enjoyed the video, and I'll be updating you on the markets this week, which should be a key week, via Twitter.